Good morning, options traders, and welcome to the weekend update here on February 10th, 2024, a Super Bowl weekend. So it is Saturday morning because we'll probably be busy most of the day tomorrow in various festivities. And I wanted to run through our current open trades and then also take a look at our market outlook going forward. So, open trades. First of all, you'll see that the Google bonus trade is not on here. That one expired at a loss. So it's been moved down into the archives folder. So take a look here. This particular trade up here in the corner, let me turn on my little cursor highlighter here. I think that might help. This expires 2/16, and while I don't normally let trades expire or carry them into expiration, this one has no risk to it. It's locked in as a profitable trade of at least around the $80 range. Not a big amount, I get it. But if we do get a pullback, this will act as a little bit of a hedge and it will gain some value if we were to get that pullback. I am not expecting that, but there's no harm in leaving this here, letting it expire. This particular trade, we can probably get one more roll up of the wings on both sides, and that would keep our risk at the same amount while adding in a few bucks potentially to this upper wing. And that order is setting out there at this point. As I recall, that order was for 20 cents. So again, we're not going to pick up a lot on that. Yep, that's exactly what it was 20 cents for that roll. And so we'll see what happens there. This trade started off as a broken wing butterfly, an iron butterfly actually, and we've adjusted it a few times, raising this right wing. Now, when I last adjusted this just a few days ago, one of the thoughts or comments was that we had broken out over 5,000 in the S&P, and it was holding and picking up a little steam, so that's certainly a bullish sign. Because of that, you'll notice this has more positive delta than many of these other trades have. That's because we're kind of shifting into a little more bullish mode based on what the market is telling us. Now, as time goes on, if our market continues moving up here, this will be in the 15% or so profit range. I might start reducing the risk on this side. So we'll see how that plays out and if our market does continue to hold here or move a little bit higher. But that's the reason that this wing is higher here and our T0 line is a little steeper. It's because we've essentially shifted into a more bullish mode. Now, this trade here, still doing fine, although if our market holds here and or moves a little bit higher, there will probably be an adjustment involved in this early this next week. There's a couple different possibilities. One is maybe just taking off one of these upper spreads, and we would see what that would do about raising our T0 line to the right here. Another possibility is taking the entire tent off and moving that entire tent and recentering that tent. And that's going to give us probably more of the theta decay that we'd actually like to see in this trade. But again, we'll kind of take a look at that after we get a sense of where our market is going here on Monday or Tuesday of next week. This SPY trade working out just fine. Again, put this on, giving it kind of a nice wide range here. And we put it on in smaller size. That only had around the $800 risk in it. That was done by design in smaller size with the intent of adding to that position as the market tells us a little more about what it's going to do. That's why it was put on so far in advance as well, because I knew that I wanted to kind of layer into this over time. Now, I know there's a couple people that are new in the service here that have asked me, can I jump in on any of these trades? Well, I would say about the only one that you might want to consider starting out would be this one here. And that's because right now it's only at a P&L of about $2. So, if somebody were to enter this trade, and we've only been in it, days in trade is only 8. So, that one could be entered, I think, without any real challenges to it. So that's my thought or recommendation there. So we do currently have 5 trades open, although this one, because it has no real risk on it, I am looking for an opportunity to add another trade. This one, of course, not only has no risk, but it shouldn't really be using up any buying power either. So possibly if we get an opportunity later this next week, I might look at adding into this. By a possibility, the most likely scenario I'm looking for is a little bit of pullback and a little bit of increase in volatility. Excuse me. And when we come over and take a look at our market, I'm going to take specifically a look at volatility here in a minute, we can see that the SPX broke out above the 5,000 mark, so it's hitting all new highs now, never seen before. And we are, though, running into the very top of this channel. Okay, so this is a channel that I've had drawn on here for quite some time, and that channel was based off this bottom, a little bit of a bobble here, but then top, top, top. So this is a somewhat established channel. And then the bottoms, you got 1, 2, this bottom broke a little below, but in general, I would consider that kind of a bottom of this range in that 4,500 area. So we're playing in about a 500-point range right now, pretty wide range. And we need to kind of see how this gets handled here. So this is with technical analysis. What makes technical analysis work is the more people that see the same vision or the same drawing, if you will, the more likely it is to bear out. And this is a pretty obvious one. This isn't one of these kind of, esoteric things that somebody looks at and sees a vision that most people don't see. This is a pretty straightforward channel here. So if we do in fact pop through that, if we pop up into this 5,100, I would expect a little bit of a pullback to the top of this line, and then probably a takeoff to higher highs from there. Now, it's also entirely possible we'll start to get a little bit of a reversal here, and if we did, I would expect that reversal to come down into the 4,900, maybe the 4,800 range. Under normal circumstances, I certainly wouldn't see it going below 4,800, again, unless it was fueled by some pretty major news. Now, we can also here take a look at SPY, and the reason I take a look at SPY, as you know, is we can see volume bars on SPY because it's shares traded, not options. And when we look at this, the volume is getting a little lower, the bullish volume here, these green bars. That sometimes tells you that we're hitting a little bit maybe of exhaustion. But what you're probably going to see again is if we bust out the top of that channel, you're probably going to get some more extended green bars here where more and more buyers are coming in as that breakout happens. And if it doesn't happen, again, we're probably going to get a little bit of shrinking in these bars. And then at some point, we'll probably get a pullback like we got, here, a day or two pullback, and the volume will be higher there because lots of people are going to take profits. They're like, oh no, I've ridden this thing too far. I need to get out, need to lock in my profits, take the risk off the table. So oftentimes that's what happens when you get these more volume on a down day and you get a fairly significant down bar. Now that could be sparked by news or something else, or it could just be a natural, what they call backing and filling. But when people start to see their profits disappear, they move in a herd mentality in many cases, trying to get out of those positions and save what profit they have. And that's kind of what we're looking for. We want to see that little bit of panic maybe start to come in. And the reason for that is that little bit of panic will get this risk or the VIX reading off of these lows. And when we get that VIX reading back up into the 15, 19, 20 range, those are ideal times for broken wing butterflies or butterflies in general. Now, we can put on butterflies in lower volatility. Those of you that have taken the deep dive butterfly class understand all the reasons why we like to wait until there's a pullback, until there's a spike in volatility. That's when we really want to be putting these things on. But we can also make them work in a lower volatility environment. We just aren't trying to squeeze them as much or get as much profit out of them in that environment. And our reward to risk ratio isn't as good in that environment. All that said, again, that's what we're looking for. We would like to have a little bit of an increase in volatility here, and that would help in adding in another trade. And the last index I want to look at here is RUT, because we have that one sizable RUT trade open. So we can see here that RUT has historically kind of banged its head on this 2020 area. So 2020 reversed, right around the 2000 reversed, 2000 reversed. Bobbled here for a couple days in that 2000 range, finally popped through and then reversed. So we are definitely in an uptrending channel here. We are making higher highs here in recent times, or excuse me, higher lows, and it remains to be seen yet whether or not we're going to make a higher high here. So we are kind of at what I would call a critical point here in this trade, where we're currently in the 2009 range. If this thing pops through there, the next stop is going to be up here at 2073. And that's why if this thing pops out Monday, Tuesday, I will likely need to look at adjusting this trade. If it doesn't pop through, if it just kind of backs up a little bit into here for this particular trade, that would be the ideal scenario. If this does pop through, we're going to have to look at some sort of different adjustments, possibly raising this right wing. There's a few different ways we can do that. Possibly taking the entire butterfly off, moving it higher, recentering it over the current market. And we'll take a look at those couple different options when we get to that situation. So that's it for today. And again, appreciate everyone that's a member in the service, in the alert service. Those of you that might be seeing this on YouTube or something that aren't members of the service, please look at the links down below and you'll see those options available to you. Also, if you're interested in a deep dive class on butterflies, it's about a 10-hour class. I also have one on calendars and diagonals, and I also have one for beginning options traders. If you're a newer option trader and you're not sure what any of this is, or you're not sure what a spread is, or what the Greeks are, delta, vega, etc. Again, please take a look down below for that class as well, and that will help kind of launch you into this whole world of options trading. So with that, thanks so much, everyone, and everybody have fun at Super Bowl parties tomorrow if you're doing that. I'm not a big football fan, but the Super Bowl is kind of more of a social gathering than anything. So take care.